Australian consumers remain deeply pessimistic in January, with the latest Westpac Melbourne Institute index showing consumer sentiment this month is at its lowest level since the 1990s recession. Aussies remain concerned about the rising cost of living and the fear that interest rates will remain elevated for longer than expected this year. Joining me now is Matt Hassan, Senior Economist at Westpac. Matt, thanks for your time. Start of the year, seems like everyone's feeling pretty gloomy.
Yeah, it's a pretty poor kick-off to the new year. As you said, this is the weakest start to a calendar year since the early 90s recessions. 81 was the index read. We're 20 points below even neutral. Same story. We've picked up where we left off last year. Cost of living concerns, high inflation, high interest rates, rising tax payments, front and centre. Consumers seeing a little bit more of a glimmer of hope around interest rates. Some of those fears around rate rises have eased a bit, but they still mostly expect rates to move higher over the next year. They're not bought into rate cuts.
Just seeing that chart on the screen, you can see sentiment really lifted in January 2021 to Jan 2022, and it started coming back down again. I mean, how quickly can it rebound if things turn the corner?
Look, I think if we get a couple of key developments, we could see quite a nice bounce. At the moment, it's all about cost of living and interest rate concerns. So the day we can draw a line under the inflation issue and we get hopefully a signal that the next move in rates will be low, I think we'll get a bounce out of that. But it might be a bit of a slog. I think we were expecting a bit of more of an improvement this month. We saw some better numbers around inflation that, coupled with the shifts offshore around the US expecting interest rate cuts, might have given a bit more impetus to sentiment. But it seems that consumers really need that clear messaging that the inflation challenge is coming back under control and that the RBA is more comfortable and the next move in rates will be lower before they improve their confidence. There are some other positives in the mix. Less fearful on interest rates. And of course, we do have tax cuts slated for July. So for some consumers, there is the prospect of an improvement in family finances over the course of this year. But at the moment, it's still all around these cost of living issues, which I think maybe contributed to a bit of a bigger than normal post-Christmas financial hangover for consumers this time around.
Well, we did see the monthly inflation indicator come out last week, 4.3%, a little lower than expected, and the stock market lifted a bit off the back of that. I guess there's speculation that the RBA probably doesn't need to lift interest rates again.
Oh, absolutely. Financial markets are pricing 2 rate cuts by the end of the year. 3 out of 4 economists expect interest rates to move lower by the end of the year. The pricing around US a cash rate, a federal funds rate is very bearish in terms of rate cuts over the course of the year. But the consumer is not really buying into that yet. And I think they need that real clear signal, from inflation coming materially lower and sustaining lower, and the green light, I think, from the RBA that the inflation story's tracking towards their expectations before I think sentiment will start to improve. I think there's also this asymmetry as well. Even with inflation coming back under control, we're still going to have to deal with the much higher cost of living. Prices aren't going to come down. Inflation's just going to slow. And so for consumers, it may be a bit of a slog sentiment-wise before they really feel like they're starting to make traction financially and when that confidence starts to come back up.
We've also got the unemployment rate numbers coming out this week. Are you expecting the rate to slowly increase throughout this year?
We are expecting a gradual rise, more due to a slowdown in new hiring and much stronger growth in labour supply. And that theme around labour supply is already very clear. We saw quite a strong jobs gain in November, over 60,000 in the month, but it was largely due to this influx of new labour supply, backfilling some of those unfilled vacant jobs, with the unemployment rate only ticking up slightly. We think for the December month, we're likely to see the unemployment rate tick down slightly, given the scale of the supply of new labour coming through. Over the course of this next year, though, we do expect a gradual creep higher in the unemployment rate. Again, another thing that gives the RBA more comfort that there's more slack in the labour market, less of a threatening environment around inflation, and that'll be a key development that'll give them additional comfort that inflation's coming back under control.
Well, the first board meeting for the RBA, first week of Feb, we'll actually hear from Governor Bullock. She'll do a press conference at 3:30. Do you think those sorts of press conferences now after every meeting, interacting with the Australian public more, can that help affect sentiment of consumers?
I think so. I think the proof is in the pudding. We're going to have to see how this one goes, and the messaging has to be really clear. But I think it'll be the direct communication line that the RBA can use with consumers and the public at large to send a very clear message. So that's probably what most consumers are keying off in terms of this inflation interest rate environment at the moment. probably not as plugged into financial markets as we are, probably not as plugged into the monthly CPI indicators as economists might be. But those direct communications, particularly with the prospect of clearer, simpler communication from the RBA governor, I think that holds a lot of promise to sort of improve the way that the messaging communicates to the public.
Matt Hassan, thanks so much for your time.